Welcome back to the Blockpool Podcast. It is Friday, June 14th, and we are here with Alex Botte, who is one of the partners over at Hack DC. Sean, thanks for the introduction as per usual. But Alex, welcome to Blackpool.
Thanks, Avi. Yeah, great to be here. Great to talk with you and Jody and Sean.
Alex, great to have you here. Thanks for taking the time. We do appreciate it.
Of course, of course. And by the way, I should say, as an important disclaimer, the views shared are for informational purposes only and do not constitute and should not be construed or relied upon as legal, business, investment, or tax advice. Views expressed are also my own and don't represent those of Hack BC. So, sorry,
I was
John.
going to take all of this and act straight away portfolio. No, I'm just kidding. No, Alex, you and I have known each other for a couple of years now, actually, and it's been quite the journey in the industry, everything. You yourself have quite a background, and before we dive into all the details and whatnot, can you give us a little background, who you are, your journey into the current role, and let us know about you and whatnot.
How'd you meet Sean, too?
Who doesn't know?
Yeah, Sean is very well known in the crypto circles. How did we meet? And now I'm trying to remember.
I think I actually emailed you probably at one point or something way back in the day, maybe. I think it was actually that. Way back in the day.
It must have been a really cold email. I feel like the success rates of cold emails. I don't know. Send it to me after, or I'll find it afterwards.
The keyword was back in the day, when it worked.
Okay, well, a little bit about me. I grew up in San Diego, which is actually where I'm at right now, at Encinitas, if anyone's familiar with that. Yeah. Love sports, love competition, played a lot of soccer growing up. And then in high school, I discovered field hockey, and I was recruited to play at Cornell. And so played there, and then also studied math, accounting, finance. And I think, as most people in that major do, they kind of did the investment bank internship between your junior and senior year. So I did that. I went to the prime services team after graduating. So I was working with hedge funds to find leverage and borrows for shorts, and also low latency trading for some of the quant firms. And I was like, the quant investing is super interesting. You're not just picking a handful of stocks. You're trying to find something that's worked in markets in the past. It has economic kind of intuition for why it should work, and then applying it to as broad a cross section of assets as possible. And if it works 51% of the time, that's a pretty good strategy. So I left Barclays a year after and went into quant investment management, where I spent a combined 8 years at AQR and 2 Sigma. And it was actually at 2 Sigma that I got pulled into crypto. I did some research on crypto there, and we could get into that if you want. But that's what brought me into crypto full time. I'm like, this is really interesting. It's a super emerging space that's going to transform not just finance, but a lot of different areas of life. And so I joined a liquid token hedge fund in 2022, but I signed my paperwork Thanksgiving 2021. So almost exactly at the market top, good timing. And then about 2 months ago, I joined Hack DC, like you said, as a partner, doing a bunch of work, some investor relations, some content, some research, some marketing. And I think I've always struggled a little bit in my career, because I'm a generalist. I'm definitely not a pure salesperson. I've seen hardcore researchers, the PhDs at AQR. I'm not that. So I'm more of somewhere in the middle. So I like these roles where you can learn a lot and be involved in a lot of different areas of the business and just improve on the things that you like and you're good at. So Hack's allowing me to do that, and it's been a great 2 months.
Kind of nerd out.
Yeah, Alex,
okay, I'll jump in.
So let me jump in with so Alex, a lot of our listeners are, coming from traditional finance. They're crypto curious, dipping their toes in. We talked about this on a previous call, but would love you to talk us through your story, of how you got selected or mandated to say, hey, Alex, you're a good researcher, go research into crypto and come back with a well, formatted professional report on it. And how did that experience go? And is that what, started to get, that spark of curiosity with you?
Yes. Well, it's interesting. I like now I want to like go back and ask you guys how you all got into crypto, because the most often story I hear is like someone told me about Bitcoin in 2015, 2017. I bought some, and then I started researching and went down the rabbit hole or whatever. That was not the case for me, Jody, as you just said. Yeah, I bet. Yeah, that's a really common, I feel like, story, and it was actually through work. So at Two Sigma, I was doing some like more thematic research. The hardcore researchers were building alpha for the models. That's not, I don't have that skill set, but I was doing thematic research, ESG, like AI, machine learning stuff. And then crypto was doing super well, right? In 2020, 2021, like really early on in COVID, people were at home trading. So crypto was doing well. And we were getting questions from our clients. What are you guys doing in digital assets? And so I wrote this report on Bitcoin, and it was in a way that was authentic, I think, to Two Sigma. It ran Bitcoin through a traditional risk factor model. So things that included like equity risk and duration, credit risk, and these long short style factors like value and momentum. And at that time, yes, this is probably like early 2021. If you looked in Bitcoin's history, 91% of Bitcoin's risk was unexplained. So it was like all residual if you ran it through a traditional model. And yeah, I think then I started looking at the top digital assets by market cap and tried to understand their factor structure. Is there evidence of beta in digital asset markets? And what we found is that there's the top digital assets move together more so than the top stocks. And we know beta exists in the stock market. And so it's really strong also in the crypto markets too. And this paper kind of blew up in a good way. And there was a ton of engagement, views, and shares. And like some of the largest consultants in the US were asking us to come in and explain it to their client-facing advisors, because it kind of spoke a language that they knew. Like, how does this relate to equities and bonds and commodities? So I'm going in and I'm like, if they ask me anything about the technology itself, like what is Bitcoin? What's the difference between Bitcoin and Ethereum? I didn't know. I was very confident in like the data and the analysis and the regressions and all of that. But then I started thinking like, okay, what actually are these assets? And that was super interesting to me. And then the person who started the liquid token funds that I was most recently at, she read the paper. And then that's how we got in touch. And she started the fund like a couple months before I joined. And I thought it was like a really cool entrepreneurial activity and to spend like all of my time on crypto.
How's it changed coming from, they have like 2,000 people, I believe, at your previous company. So like now I think I just checked on LinkedIn, it was around like 20, 30, I believe. So how has like the culture just evolved for you going from this massive organization to being, someone prominent at this smaller company now?
Yeah, a little bit more focused and like smaller. I think at some of those large organizations, like you have a very defined role, and you can collaborate. It depends on the culture of the organization, but you can collaborate with others. But you, at the end of the day, like you have a job description, and you kind of like stay in your lane. I think at smaller firms, like the most recent fund I was at was like 5 people, so it was really really small. Hacks a little over 20, and you kind of have to do a mix of everything. Like some of our best deal team members are also out there fundraising. And so at Hack, what I liked is, I'm going to work on investor relations and make sure that like people understand the portfolio and what we're doing. But also I'm expected to do research myself, like more on what I'm good at, like market trends and data analysis and stuff. You can bring some of that to VC, I think. But I think that is the difference, is like you can do a lot more. In like a bunch of different areas. So I do think it suits generalists like myself well, these smaller firms.
And so who could you like describe just a little bit about Hack? I don't think you're able to go into like the details or even the portfolio companies specifically, but if you could just share whether kind of like the thesis of Hack, if you guys are investing in like thematics like you mentioned earlier, and just overall, is it like seed funding, Series A, that type of overview would be great.
For sure. And actually the name Hack too. I remember when I told my parents I was joining a company, or, a VC called Hack, they were like, what is that name? It sounds like, there's some weird stuff happening. Hack is like, it's more of these like super clever engineers that collaborate and like rapidly iterate on technology to deploy something. And like at Two Sigma, we even had these like hackathons. And so it's more like what we're trying to back the hackers that are building the future of the internet. So that's kind of like the hack mission. Who we are, yeah, we're a crypto native VC firm, global presence. We do have offices in New York, near Union Square. I'm in San Diego, and we have people all over. We manage a little over 500 million in AUM, and I think like the biggest there are three differentiators of hack. One is just we're really successful and experienced investors. So our managing partners have been investing in crypto since 2014, a decade, and backed 100+ deals. Alex Pack, who's one of those managing partners, he started the Web3 practice at Bain Capital. So they were like the first PE firm to start investing in liquid tokens. And then he started Dragonfly. He co-founded Dragonfly, which is like the largest crypto dedicated VC in Asia. And then his partner, Ed Roman, the other co-founder of Hack, he's a prolific angel investor and really like focused on the open source software space. And so he's like a really good Web2 portfolio in addition to Web3. And between the two of them, they've seeded a bunch of managers that I'm sure you've heard of as well. So yeah, a lot of our deal flow and reputation come from that experience, like decade plus in this space.
Wow, love it.
The second differentiator is like, and this is your question, Avi. Like, we are very thesis driven and focused on particular areas of the market. So one is seed and early stage. That's what we're focused on. And then we try to back category creators within the infrastructure sector. So because of those two things, like the very like focus that we have within the market, we stay small and kind of resisted the urge to raise a lot like $1 billion funds. That's not who we are. And then the third is an institutional platform. Yeah, 20+ person team. The people on the investment team, well connected, strong reputations in the crypto community. Most of them themselves are like well-known angel investors, advisors to some of the top crypto projects around the world. Our ops team, which I'm technically a part of, so I'm biased, that first class, great legal and finance function. We're technically an SEC RAA, hence the disclosures at the beginning. But I think it's really like we're very compliance like minded and oriented, which I think helps, especially in this asset class. And then high quality institutional LP base, pensions, endowments, family offices, some large kind of like traditional financial institutions. So yeah, built a really strong kind of institutional platform that backs this VC.
Wow. Yeah, no, I mean, when we talk to firms all over the spectrum of investing. Obviously, our focus is really around, blockchain, digital assets, crypto, tokenization, etc. What are some of the trends you're seeing? And, does Hack VC invest in other verticals? Or are they only focused on blockchain, digital assets, crypto? Tell us a little more about that.
Yeah. So our focus, is on that like early stage deep tech infrastructure. It's kind of the boring stuff. Maybe I shouldn't say that, but I think it's like things that are more like they've been proven in traditional tech, proven in crypto. And so the things that we don't invest in, I think that's kind of interesting too, is like we don't do NFTs, gaming, metaverse, consumer oriented stuff. That's not where our expertise lies. Like Alex and Ed, they've been backing infrastructure in both Web2 and Web3 for a long time. So I think staying focused and not still creeping into other categories that we might not have like the expertise in, or like more growth, that's just not what we do. And then Sean, you asked about like I guess areas of the market that we're focused on. I said infrastructure, but maybe we could go deeper into that.
Pretty wide.
It does. Yeah. So within that, it's like we have like 3 kind of theses right now that we're investing across. Modular infrastructure, the intersection of crypto and AI, and then real world assets and DeFi. So can kind of get into any of those.
Yeah, just see the obligatory
interest.
The RWA.
Yeah, real world assets. But in TradFi, I think it was like risk weighted assets. I don't know. Crypto, we all have our acronyms.
Yeah, but no, I mean, you can tell. I'd love for you to tell us more about like the real world asset stuff, what you're doing there. Which kind of leads me into also the ETFs. Where do you see those going? How is has that had any impact on the business, positive, negative, etc.?
Yeah, well, maybe the ETFs first. So they've obviously been in the news a lot, and we all know about Bitcoin spot ETFs, super successful. Now with the Ethereum spot ETFs, this actually might be more important for us than the Bitcoin spot ETFs for two reasons. One is it potentially, I think, opens the floodgates for more digital asset ETFs, either like combining Bitcoin and ETH together and like dynamically weighting between the two, or like Bitcoin was the only asset, I think, that the SEC has said, this is not a security. This is a commodity. Everything else is kind of like, what is this? Is it a security? And the legal leap between something like a Solana or a Polygon to Ethereum is smaller than the leap from Ethereum to Bitcoin. Maybe there are more ETFs. So that's one. But then the second is, maybe it's controversial, but you can build on Ethereum, like smart contracts. There's a lot of apps. It's it's a flourishing ecosystem today within Web3. And so this could legitimize institutions building on top. And that would be a major uptrend for the things that we invest in, because that first theme that I mentioned, modular infrastructure, is like pretty Ethereum heavy, I would say. So if institutions are building on the Ethereum ecosystem, and we can get into BlackRock too, because that's an interesting use case, or an interesting example of this, but that'll benefit the Ethereum and the Ethereum adjacent ecosystem.
On the RWA side, I have plugged these guys because they're awesome. But we have like Tyler and Ray from RWA World. So they're kind of seeing the same theme just explode. So they're building this data analytics platform for all the like RWA companies. And I jumped on one of their like Twitter Spaces yesterday, and I hear them kick it off on the explanation of like real world assets. And Ray just jumps in and he's saying like, yeah, like imagine you're a horse and you're on the plains of Mongolia, and suddenly like you're thirsty, so you're like, oh hey, let me like wander over, drink a little bit of water, and then you're like, boom, suddenly I'm a domesticated animal, and next 2,000 years I'm gonna be like riding, people are gonna be riding my back, and then he's like, boom, like next 2,000 years you're gonna be like tokenized on the blockchain, and some rich horse owner in Kentucky is going to be like trading you, via his cell phone, and then it's a $50,000 net asset value. And there was some company that was on there that was tokenizing horses, and I had never heard of that, but I was like, yeah, I could see people at the Derby wanting to pull out their phone and make some trades, or accept bids for a horse they saw at one. There's this guy that's a Saudi wealth fund that's not afraid to spend some money. So there is some backing to it, and it's fun to see the use cases. Before we get further in RWA stuff, would love to hear more about your take on the BlackRock use cases that you see.
Yeah, no, maybe I'll start with this because it ties the horse thing to BlackRock. So I'm pulling up this Larry Fink quote, which I'm sure you've heard. But ETFs are step one in the tech revolution in the financial markets. Step two is going to be the tokenization of every financial asset. So yeah, I mean, BlackRock, a huge splash, right, in Q1 with IBIT. It's the best, or it's the largest spot Bitcoin ETF. So they had a lot of success there, but they also like showed their commitment to on-chain asset management with BUIDL. So that's like their ERC20 token that represents ownership in a BlackRock money market fund, and it's deployed on Ethereum mainnet, and it's the largest now tokenized treasury product on chain. And there have been others that have been around for a while and has really gone up and to the right. So I don't know. I think the BlackRock move into on-chain asset management underscores this like growing trend and the potential of tokenization in markets. So I think that's pretty exciting, because like the first, this is consensus, but like the first OG kind of real world asset stable coins, over, what is it, like over 150 billion in AUM. And it's like, so you have US dollars that you can send to someone, really low fee, and it's instant. And I mean, for us in the US, it's like we have Venmo. That's fine. Venmo works well enough. I think in other places, like and cross border, that's huge. Like that's a really big use case. And so I think then now you have these tokenized treasury products, this horse stuff that you're mentioning, synthetic real estate. I know you had some maybe projects on your podcast that talked about this. So I think there's huge. I mean, crypto is great at making everything transparent, opening it up permissionlessly for anyone to access. If you can access on chain that are assets that hopefully have like liquidity, that's really big. And so tokenization, we're strong believers in. So investing in stablecoin projects and real world asset platforms that are trying to tokenize both treasury products and then other assets like some of those that I just talked about.
I was just following up this other tweet with Larry Fink that came out. He was saying that today the G7 average debt to GDP is 129%. No matter how much we tax, how much we cut or reduce the debt, it will not be enough. And this is why building new infrastructure is critical, especially through the public-private partnerships. Is he alluding to blockchain in this situation? And, it does seem like he's coming out with these very strong statements, and BlackRock's not some startup, right? It moves the markets completely. Hearing someone like him get involved and seeing these huge institutions coming in, it's got to be a wake-up call for a lot of just the everyday people that are out there and not paying attention necessarily. Where else in what you're able to say, like you mentioned BlackRock, what other like huge institutions have you seen kind of leading the charge? Probably being on the Hill with, BlackRock's definitely got a place in DC talking to all the politicians, right? And so being able to see kind of them building that together with that public and private he was talking about, where else have you seen some examples that you can share?
Yeah. And I think, one is, this was maybe a month ago. Yeah, mid-May is when it was announced, but SWIB, the State of Wisconsin Investment Board, it was, their $115 billion plus state pension is announced that they allocated $100 million to IBIT. And so I think, it's obviously a small part of their portfolio, but I think it paves the way for their peers to follow, these like large institutional investors, and starts to take some career risk off the table. So in BlackRock's case, if you're a large asset manager, Invesco, other firms like that, you look at what BlackRock's doing, what Franklin Templeton's doing, Fidelity, like they all have blockchain related initiatives. They're going to take some, I think, career risk off the table for people there that want to support blockchain initiatives. And then the same thing on the institutional investor side. And this gets back to some of my work at AQR. I was there about a decade ago, and we were putting alternative strategies like long short equity and managed futures and trend following into regulated 1940 Act mutual funds. And the pushback at the time was these things are super risky. They're LSD, they have LSD in them, leverage, shorting, and derivatives. And it shouldn't be in my portfolio. Where does this even fit? And it's so relevant to the crypto conversations today. Isn't crypto super risky? Where does it fit in my portfolio? Is it even additive to my portfolio? So I think some of the portfolio math you can do to show, yes, digital assets are risky. But the risk-adjusted return improvement you get from even just a small allocation is worth it in your portfolio. And I'm sure SWIB, of course, they're doing that analysis and they're seeing that it is worth the risk. And by the way, the asset class is going to de-risk over time, like all technology does. So that's used. That's has adoption.
Yeah, I mean, so yesterday we had storage actually on our one of our spaces, and very interesting protocol, extremely. And given you guys focus on the infrastructure and the infrastructure for tone of thing. But that being said, couldn't let you on the podcast without giving us some commentary on the ETFs. Where do you see those going? What do you see? Obviously you can't comment in too much detail, but what are your general thoughts on that?
Yeah, no, I think these ETH ETFs, like I was saying before, I think they that's going to be huge for, again, continuing to legitimize the asset class. I should give her credit because this is my former boss at a prior fund, but she was one asset class, or one asset is kind of niche if you just have a Bitcoin spot ETF, but if you have two, it starts to become an asset class. Yeah. So I think that the easier it is for people to get access to digital assets is great. So add it to your portfolio through your Fidelity or Schwab account. Start to understand how it moves. You track it. You start to do more research on it. I think that's going to bring us, if you look at an adoption curve, over that chasm into you had this really kind of niche group, all of us, these nerdy kind of tech, very I don't know. I don't want to say forward thinking, but experimental. We're experimental. and bringing it over into like this mainstream adoption. So I think that's what the ETFs can do. And also, by the way, for like the financial advisor community, now you can see the portfolio holistically, including digital assets. So if their clients had a MetaMask wallet or a Coinbase account, they can kind of be aware of that, but they definitely need to understand that for the overall portfolio picture. And now if you can have Bitcoin in like an ETF and in your regular accounts, they can charge on that. And it's just a better experience for the client because it's like a more holistic view.
One of those
so,
things that, sorry, I didn't mean to cut you off, with the other big news too, which I thought was interesting from a retail perspective, because a lot of the noise has been obviously focused on institutions, but then Robinhood goes and buys Bitstamp. And Robinhood's got like almost, I think, 24, 25 million users, right? About 13 million active. And so that could hopefully bring, once that, it's going to take a little time to get like fully integrated, of course, but that's a whole new area, right? We had kind of Coinbase as the one place where the normies would go. Now we have Robinhood. So that's expanding as well. Do you see there being a pretty big lag here with, I know Hack's not so much focused on the retail apps, but in general, have you seen any trends that, beyond Bitstamp, if retail is going to quickly follow behind? Because I've said this story a million times now. I have a friend who literally thought Bitcoin was dead. I was like, you're not paying attention to the news at all right now. But it is cool to see that like my normal friends that are not in our little bubble of a world we live in are starting to like, pick things back up again. Curious if you saw any retail trends as well.
I think it's a great sign that your friend still is like Bitcoin is dead. And I think, well, even Bitcoin, like that has reached an all-time high this cycle. Ethereum's all-time high is still at the peak of last cycle. Solana's all-time high is still in November 2021. A lot of stuff still hasn't caught up yet. And so I think that there is still, I think we'll know if we're closer to the top when your friend does start reaching out and is like, how do I buy Bitcoin? Like, should I do the ETF? Should I do Coinbase? Should I do Robinhood? But in terms of retail adoption, another kind of cool, interesting use case, and this ties to the real world asset theme too, is access. So being able to like tokenize things that you could transact with on chain that you wouldn't be able to buy if you're like in a jurisdiction. Like say, I don't know, you're in like Southeast Asia and you want to buy Apple shares. There are platforms that are now coming out and like are in market today for you to go through like your exchange in wherever you are in Southeast Asia and be able to get exposure to Apple. Like that's the type of stuff that like interests us more, like this global, like a more global platform that's doing something that like wasn't available in the past. Like it's like stable coins, but then applying it to stocks and other real world assets.
Yeah, Alex, you mentioned earlier around modularity, and we've had on some people in the conversation or on the podcast, previously, where we're trying to get them to help us explain, these different stacks of like, what is data availability and like, what's an L2, what's an L3. And it's kind of hard for people explain that to an RIA or wealth manager that's looking at this totally different world of, how like equities are broken down. How do you have a way you explain like what's real and what's just like infrastructure noise that like, look, you don't need to know how to do Kubernetes. Not most people need to know how to do Kubernetes, just like the cloud works and there's somebody smarter than you that's going to be setting it up. And then beside that theme, like what are the hot blockchains you're watching? Or from a researcher perspective, like what are you like trying to spend the most time reading up on?
Okay. Wow. So many things there. One is, I think you just highlighted the importance of storytelling. I'm in VC. I don't have experience in VC really. My experience is in liquid markets, both crypto and traditional. But I think that is something that's super important in VC, not just when you're interacting with investors, but also when you're trying to explain your research or your thesis, like a modular thesis. What is this? And it helps like with clarity of thought. But especially when you're investing in things that are Kyber creators that don't have names to them. I think with the modular approach, like our idea there is like, these layer one blockchains, they're really like bundled developer platforms that provide a bunch of services. And you could either have like one that has all of those services together and, it's super easy to transact across, and the user experience is fantastic. I think that's great for today. Solana is a good example of one that kind of like brings in all those services together. I think Phantom, a Phantom wallet and being able to transact on Solana, it's pretty good. It's pretty good. It's, I think, better than going to Ethereum right now and bridging to a layer 2. And but I think that's solving for a problem today. I think Modular is more solving for a problem 5 to 10 years out, which is like sacrificing some short-term composability, but for long-term scalability improvements. And so if you break out all of those components you mentioned before, Jody, the data availability, execution, and settlement, you can optimize the crap out of that. And then, and that allows for like high specialty, high performance in each of those areas. And then obviously figuring out how it all comes together, that's where you have some user experience issues that I think will solve in the next 5 to 10 years. But the scalability improvements we're going to get are really, really good. So yeah, focusing on each of those layers, like what is the best data availability solution? What is the best kind of like settlement execution? And like how can you bring these things together? You asked like what blockchains I'm watching. There are some, I think, some cool examples of Ethereum layer 2s that are bringing in virtual machines from other ecosystems into, to tap into the Ethereum's network effects. Like Eclipse is a good example of that, like building an Ethereum layer 2 with the Solana virtual machine. And then Movement Labs is also doing that with the Move programming language, which obviously came out of Facebook. And if you're a developer and you know Move, you're like, this is a much better programming language than Solidity today. So I could build on Aptos or Sui, which is great, but then you lose all of the network effects, all the TVL, all the liquidity in the Ethereum ecosystem. So as a developer now, you don't have to choose. You can like use the Move programming language while also tapping into Ethereum, which I think is really cool. And then there's like another one for Cosmos that's coming to the Ethereum EVM. So that's a pretty interesting trend, like bringing those things together, bringing the best of both ecosystems.
Yeah.
And then one other one, and we were talking about this before we clicked record, but is Berachain. So like this is I think a start of a trend of a vertically integrated blockchain that's like meant for DeFi specifically and optimizing for as much liquidity in the ecosystem as you can get. So having like a single kind of unified stable coin, separating the governance and gas tokens so that you have kind of like more liquidity in the system for gas. And yeah, just like cool consensus mechanism, really smart team. I'm talking about like their marketing before this, like, very business savvy, but also like highly technical. So having kind of that really nice blend. So Berachain is one, that I'm watching for sure. There's always like the new layer 1, right, of the cycle, Solana or Aptos and Sui. Like, maybe Berachain is the one for the sake.
Well, Alex, I hate to do this to you, but we're running out of time here on the show. It goes by fast when we're all sitting here talking. And that is amazing. Really quick, where do you see the industry in 5 years, and where can people see you at conferences?
Industry in 5 years, I think. I think that I do believe that there's going to be more adoption. I think like my parents hopefully will interact with blockchain. They're not going to have a MetaMask account. There's going to be some other way that they're going to be interacting with it without realizing it. So I think more adoption. I do think more performance, more scale. And I think we're going to see institutions following BlackRock's lead. We talked a lot about BlackRock, and I think more institutions are going to be doing stuff on chain. One last thing is like disruptive technology. Chris Dixon just wrote about it in his book, Read, Write, Own, right? And like disruptive technology, like you can do that with like very composable software that's open source. So I do think like the open source approach that BlackRock is going for with BUIDL and what they're doing on Ethereum mainnet versus their own private permission blockchain, like that's the way that this is going to go versus something that's a little bit more closed off. So that's going to be like the more disruptive, and hopefully other people that aren't incumbents follow that trend and can really make a splash there too. And then where can you find me? I guess you can hack us on Twitter. Follow us there for sure. We have like an insights page on our website where we post. I don't know. It can get pretty technical. The research, we're going to write one on crypto by AI.
Oh, nice.
Kind of like the red herrings and the opportunities. There's so much like. I think there's a lot of hype there. So like what's real versus what's not. So there's going to be a good piece coming out on that. Follow us there. That'd be great. And we'll be at the conferences later this year. Token
Bitcoin
2049.
National?
I don't know if we'll be at Bitcoin National. ETHCC, Solana Breakpoint.
Nice.
Token 2049. yeah, hit us up because I will have, events and stuff. So I'd love to.
Very
Love to
cool.
meet up.
Well, Alex, thanks for coming on.
Pleasure meeting. Yeah, this has been great.
Yeah, right back at you all.
Thanks so much.
Sure. Thank you, Alex.
See you guys.